Hey YouTube, this is the Robinhood investor. Hope you had a great day of trading. As always, I really appreciate the support. So if you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. Today I'm going to talk about Disney's earnings report. Earnings reports are important to follow because they provide insight on historical performance, typically on the previous quarter, and future guidance, which includes information a company provides as an indication or estimate of its future earnings. So let's go to the Disney stock, ticker symbol DIS. Disney reported earnings after market close today and actually caused the stock to go up a bit after hours. In terms of performance, today up 0.77%, after hours up 0.48%, past week up 2.58%, past month up 2.99%, past 3 months down 2.89%, past year up 5.7%, and past 5 years up 55.79%. Go down a little bit, look at the statistics. So in terms of 52-week high, it's $120.20. 52-week low is $97.68. Market capitalization is $167.7 billion. P/E ratio is 13.47, and dividend yield is 1.44. Let's go to the Seeking Alpha to look at the earnings report. So Disney beat by 30 cents and beat on revenue. So non-GAAP earnings per share of $1.84 beat by 30 cents. GAAP earnings per share of $1.86 beat by 34 cents. Revenue of $15.3 billion, down 0.3% year over year, and beat by $250 million. So as I mentioned, Disney had a strong earnings report and it rose after hours. And the positive sentiment was due to strength in media networks and theme parks. So revenues were essentially flat as gains in those areas were offset by lower takes from the film studio and a slightly below flat result in the newly organized direct-to-consumer unit. Segment operating income, meanwhile, fell 8%, and net income dropped 37%. And the CEO, Bob Iger, said, "Building a robust direct-to-consumer business is our top priority, and we continue to invest in exceptional content and innovative technology to drive our success in this space." So they're trying to compete directly with Netflix, Hulu, and other streaming platforms. And it's definitely a saturated market, especially with other tech companies trying to get into this, like Amazon, Apple, Facebook, and Google. Revenue by segment, media networks was $5.92 billion, up 7%. Parks, experiences, and consumer products, $6.82 billion, up 5%. Studio entertainment, $1.82 billion, down 27%. Direct-to-consumer and international, $918 million, down 1%. So takeaway is that the media networks and parks experience were up, but the studio entertainment, that was down heavily. So it brought so that's the most negative news from the earnings. And then operating income by segment, media networks, $1.33 billion, up 7%. Parks, experience, and consumer products, $2.15 billion, up 10%. Studio entertainment, $309 million, down 63%. Direct-to-consumer and international, negative $136 million, down from a previous negative $42 million. So as I mentioned, overall, earnings reports for Disney was pretty positive because of their media networks and theme parks. But what really brought it down was their film studio, the entertainment studio. Now let's go to tip ranks. Take a look at the Disney analyst ratings. So in terms of analyst ratings, 4 analysts recommended Disney as a buy, as you can see right here. That's in the last 3 months. 2 recommended to hold, and 1 recommended to sell. So overall, it's a moderate buy from 7 analyst ratings. And average price target of $122.17 with 8.44% upside. And on the low end of price targets is $97. On the high end is $135. So that's in the next 12 months. That's all for this video. Which stocks are you looking at? And which earnings reports are you following? Comment down below. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.